on Halftime Report. The market continues its march forward, but it's also a good time to get in some important opinion. We do have, the Chief Economic Advisor in conversation. Let's hear him out.
On the first two charts on your left, at the same time, while certainly the inflation rate has been trending, appears to have peaked in many countries, US, also maybe in the Eurozone, etc. The important thing to remember is that to the extent that economic slowdown is not going to be as acute as was anticipated earlier, and to the extent that financial conditions remain looser or less tighter than anticipated, because asset markets, particularly stock markets, are quite resilient, to that extent, and you can look at the National Financial Conditions Index in the US, to that extent, there is going to be a greater risk of monetary policy tightening or a greater, longer stickiness in global inflation rates. But one silver lining for India will be, if monetary policy tightening runs longer than what central banks are anticipating, it would definitely keep commodity prices dampened in the course of 2023, particularly crude oil prices. It is in fact comforting that crude oil price has been well behaved in the last 2 or 3 months, despite the risk of oil price cap coming up in December, and therefore one would have expected the market to price in increased supply uncertainty. But the recent thawing of relations between Eurozone and the US on the one hand and Saudi Arabia on the other is also prompting speculation about OPEC going back on the 2 million barrels per day cut in production that they announced a month or so ago. So in a way, at the moment there is a certain uneasy truce or pause in the global uncertainty, which is good news. But we cannot rule out the possibility of the current tightening cycle, even if it is slower in terms of the magnitude or the pace, lasting longer than we have anticipated, simply because financial markets refuse to roll over.
Okay, so that's the Chief Economic Advisor